Oh man, so some new macroeconomic data has just been revealed. We received the ADP jobs figure, which has come out in a positive direction, but there are some negative aspects to the report which we need to delve into. It's a bit of a double-edged sword, so I need to break this down for you guys. Plus, we have a really critical catalyst on Friday, which I need to make you guys aware about. Guys, don't forget to smash the like button, don't forget to subscribe. As you can see here, Bitcoin is now doing exactly what we said in our video a couple of hours ago. Here is what I said. The opportunities yesterday, you saw us monitor this uptrend, was a nice, good trade opportunity, and we watched for the breakout. I shared these alerts in the Telegram, so make sure in my free Telegram group, links in description, caught the breakout to the downside, and you can see we're creating something similar here. I mean, look at this hourly candle on the bounce of this trend line here. Do not be surprised if it tries to get a run up and then come back test back towards here when the market's open. So that's something we're looking out for here on the short term here on the hourly. And as you can see, exactly the same. Before the market opens, we see this little move from the bottom to the top side here on crypto. And then we get the breakdown of trend apparently when the markets open up. Now, we've just received some jobs figures literally minutes ago. We've had 132,000 new private payrolls. Okay, so this is the private payroll reading. You get your BLS one on Friday, which is your non-farm payrolls. Okay, so in essence, what we've got here is 132 versus the previous month of 268. Okay, now what does this mean? In other words, this means that companies, businesses are deciding to slow down their employment. Okay, so they're taking it into their own hands and saying, given the environment, given the interest rates that we're seeing, I'm going to slow down my hiring. So this is a clue that the economy is starting to grind to a halt. Now, that will be good from Jerome Powell's perspective because it means, okay, hopefully we can start to see inflation come down if we see less and less crazy demand by employers to hire everybody. If we're at max employment, everybody's got loads of money in their pockets, they're going to spend it. That's going to lead to inflation very, very basically, okay? So that's what we need to see. However, when you dive into the report a little bit more, what you do find is that there is still an inflation aspect. August numbers add to the inflation worries as the firm reported annual pay is up 7.6% for the month, okay? So yes, the fact that that figure has come down in terms of the number of people employed is a positive because you do want to see that start to slow down because that can give you a precursor for inflation, but the wages are still going up, okay? So there's still a decoupling going on there, which we need to monitor. Now, important to understand that the ADP figure is almost like an estimation. The real important one is the one we get tomorrow, which is our non-farm payrolls. In July, it was 528,000, a huge month with loads of new jobs added. The consensus for this month coming up is about 300. Some are saying 318. Let's call it 300 to about 320 range, but we want to see that come down in this month, okay? We want to see that calling off. Remember, if the jobs market remains too strong, these numbers are too high consecutively, that's going to give Jerome Powell even more ammunition to go aggressive with interest rates, okay? He said he's going to be aggressive, and the only chance we have of him slowing down is two things. One, inflation comes down, which is the stance he's taking. He's saying, I'm going to do what it takes until we see inflation come down meaningfully. Or we really start to see a weak labor market, right? If we really see people struggling, we really see unemployment starting to proliferate, that will be a concern for Jerome Powell, and then the political pressure will be on him to start pausing and maybe even reversing his rate hikes. This is why it's so important to look at this data, and definitely something we will be covering on Friday. Another interesting thing I want to look at in terms of the conversation around inflation is let's take a look at oil. And you can look at the crude oil futures. If I just go on the daily chart, you will see here we're really now starting to come back down to interesting levels, okay? Another down day here, down 1.3% here on crude oil. And you can see I've drawn a support line around that 85 mark. If we can breach that 85 mark and break through to the downside, things can get really interesting because oil plays a big part in the CPI reading. So if we can get this back below 85 and maybe in this 80 range to 70 range, that could be really good for seeing a reduced CPI inflation figure, which again can get Jerome Powell to think his rate hikes are working, and maybe we can start talking about the idea of a pause in rate hikes. That's what the market is looking for. So a good sign on that front as well. Now, also quick update on a bunch of Tether FUD. A lot of you guys have been asking me to cover this, but it really is just FUD. So there's no need to really cover this. You had Wall Street Journal of all places coming out and saying Tether says audit is still months away as crypto market falters. Look, this is old news. This is nothing new. None of these major crypto stable coins have good audits. Tether says one is on the way and that they're going to be audited by let's see their response here, by BDO, who's a top 5 accounting firm. They gave their response here back to WSJ and said, no, we're not doing anything wrong. But look, you guys know my stance. If you don't know my stance on stablecoins, go watch my video, which I'll link up here. But in essence, it's a necessary evil. Use what you need to use. Please do not leave crazy amounts of money tied up in stablecoins, and try to diversify between the different stablecoins. Right? Get yourself some Tether, get yourself some USDC, maybe some BUSD, and a few others, and just mix it up, right? And just be in it as quickly as possible, and then try to get out as best as possible. I know that's not easy. I know there's various reasons why you would need to be in stablecoins. Just one of those spaces right now which isn't regulated, and we know that the SEC are all over this, and they're going to want to be all over this, and it's probably the SEC who had a word with WSJ, Wall Street Journal, to put this kind of thing out. Okay, so we'll just park that there. But for those who aren't familiar, just a quick recap, stablecoins make their money on a few different areas, and this is why you guys need to be cognizant of the risks involved. This is not a riskless currency. I hear a lot of people saying, yeah, but it's just a stablecoin, it's supposed to be stable. No, that's the biggest misnomer ever. When you move your fiat into a stablecoin, you need to think like you're in a crypto. You are in a crypto, okay? In essence, yes, they make their money from fees. You know that, yeah? Tether can make their money from fees, but they also loan your money out, right? Just like they loaned 1 billion to Celsius Network. That's what these companies do. They loan their money out. And even Tether's reserves are not fully in cash and cash equivalents. It's in other cryptocurrencies and in other corporate paper as well, which all can fluctuate technically to make the stablecoin insolvent. So you guys need to be cognizant of that. Feel free to have a Google and read up on it, but it's not like your money's just your dollars are just sat in a bank waiting for you to ask for it back. No, they go and try to make money on it by lending it elsewhere. That's called rehypothecation, and we need to be cognizant of that. Okay, so that's what we got this week. Loads going on. Let's head straight back into the charts to take a look at how we're doing here intraday. And as you can see, we're following the pattern which I was kind of worried about, right? Which is where before the market opens, we get a move to the upside, then we fall, we get a move to the upside, and then you fall again. Let's bring out the 4-hourly EMA ribbon, which I spoke about earlier today. Sorry, that's the hourly. Let's head over to the 4-hourly. And again, as predicted, we're running into resistance on this 4-hourly EMA. So we just need to take the data as and when it comes. No need to make any rash decisions. You can see here, one second. You can see here we run into our 4-hourly EMA ribbon, got rejected, ran into it again, got rejected. Now I'm looking to see, okay, do we create a higher low above around these levels? Can we rotate before these levels, right? Do we get something like this and go try get a higher high, which is an uptrend, or are we going to be thrown to the downside and create a lower trend? Remember, what I'm getting prepared for is lower parts of this channel, right? We're clearly showing some strength around the 20,000 level. That's not a surprise, but once we lose that, how quickly will we end up to 19,000 and maybe even breaching 19,000? That's what we're looking for in terms of dip buy for myself. Cool. Hope you guys enjoyed this video. Hope you appreciate this quick, rapid update on the jobs figures. Big day on Friday with the BLS non-farm payrolls. We will be looking out for that. We want to see around 380,000 new jobs. I'll give you guys another update on that at the time. But it's good news that the ADP figures are showing that the number of jobs are coming down. I know that's not good from a humane point of view, or from, just from a political point of view, it's not great. But in terms of inflation coming down, you want to see some weakness because the labor market has been unhealthily strong. Like you've been at max employment, like Jerome Powell said. So you want to see that cooling off. But at the same time, you saw that wages continue to climb up 7.6% in that reading, which won't bode too well. So you want to see that start to cool down as well. Hope you guys enjoyed this video. Don't forget to smash up the like button and subscribe. Go and watch this interesting video I posted earlier today because I share some really important on-chain metrics with you guys, which shows some of the activity on the blockchain network, on Bitcoin in particular. So make sure you go watch that and let me know your thoughts in the comments. See you in the next one.